Let's get across the market open now. David Lane joining us from Odd Minute. David, welcome to Wednesday. Now, of course, tariffs remain the focus globally, and this after some developments late yesterday where China retaliated for the tariffs that the US is putting on Chinese goods. How did that play out?
Yes, you're right, Andrew. We saw a bit of a retaliation, probably a bit of a muted response from China at this point in time, but they announced that they will put some tariffs on US coal, LNG, and oil. So, uh, yeah, there's been some reaction at this point in time. As far as we're aware, Presidents Trump and Xi haven't met or haven't spoken yet. We believe that's due to happen later in the week, but the Chinese tariffs started this week, and then the converse to the tariffs in the US.
You mentioned in particular the Chinese hitting US coal, gas, and oil. Is there a potential benefit locally, do you think, for those producers?
Yeah, well, I think that could be the case, Andrew, because obviously our trade with the US isn't that large. Australia's exports of our exports, only 6% of those go to the US. So China is our major trading partner, and that's really the impact that we're going to see. And obviously, we do provide coal, LNG, and oil to China. So we're competing against the US, and they've got tariffs on theirs, and we don't have tariffs on ours. That should be a net positive for Australian producers, and could well be a bit of a shot in the arm for those local producers.
So, what should we watch? Because obviously we've got President Trump paused those tariffs on both Mexico and Canada. There was some speculation that there may be some deal try to be struck between President Xi and President Trump. That hasn't eventuated, as you say. The call may come later in the week, but it's all part of this negotiation, essentially, from Trump.
Yes, that's right, and that's what we saw with the Mexicans and Canadians, and could well happen with China as well. The other thing that China interestingly did, as well as announcing the tariffs, is that they've opened antitrust investigations on Google, which is obviously a major company in the US. So that could well play into those negotiations. So it'll be an interesting week to see how those discussions come out.
Yeah, although Google obviously has a minimal presence in China. Nonetheless, and speaking of which, Alphabet actually reported after the bell. What do we see?
Yeah, they did. It was a reasonable result as far as the overall profit were concerned, although the revenue slightly missed expectations, and they also announced a lot of capital expenditure, so about $75 billion worth of capital expenditure over the next 12 months. Obviously, a lot of that to do with AI. The aftermarket appeared not to be particularly excited about that result, and were concerned about not only the revenue missing, but also the very high expense on the capital expenditure, particularly when we look at what DeepSeek is able to do with much lower capital expenditure. So we actually saw Google shares or Alphabet shares off quite a bit in aftermarket trading, which could lead into a softer market in the US. We also saw AMD report, which is a chip maker, and interestingly, their data center revenue was disappointing as well. So we saw those shares off in aftermarket trading also.
Palantir also reporting once again all about AI.
Correct. Yes. Yeah, they were actually very, very strong. So they reported during the market. Shares were up about 20%, indicating that demand for AI-related business was still very, very strong. So the market actually, bid them up and bid up a number of the other AI-related stocks. Amazon had a good day as well. So, some different views on AI. It'll be interesting to see how it plays out in the US tonight.
Now, we're sort of approaching the end of US reporting season, just getting going locally though, with our own earnings results. What are you looking forward to today?
Yes, you're right. February is the reporting season. So far, a little bit quiet, but we start with Amcor announcing their results today. We've also got results from BWP Property and Centuria Office. So a few results, but the real meat of reporting season will be next week.
All right. Are there any sort of key sectors or stocks you're going to be watching out for, David? Perhaps that gives you an indication of how companies are travelling, some guidance there, certainly earnings, given how, I guess more broadly what we're seeing with the Australian economy.
Yeah, well, I think what will be very interesting is the consumer discretionary sector. We saw that the retail sales are reasonably flat at this point in time. Obviously, the cost of living having a bigger impact there. And we actually, last reporting season, we saw that many of those consumer discretionary stocks reported above expectations. So it'll be interesting to see how well they do this time. We're going to reporting season with JB Hi-Fi, for example, trading over $100. So the market's still fairly positive on many of those stocks. It'll just be interesting to see whether or not the results justify that positivity.
What are your expectations in the resources sector, given that those commodities have been under so much pressure?
Yeah, we actually see that there's probably a bit of value in those resource stocks. Obviously, as we mentioned, the relationship with China is key to that, and the impact of tariffs. There's been a bit of a more positive view in that the potential tariffs that Trump had been talking about don't seem to be as extreme. So from a demand point of view, that should be a bit of a positive for Australia. So I think certainly our coal and LNG producers should do all right in the short term, and then medium and longer term, although the outlook for the iron ore price is poor, many of those stocks have been sold off to a fairly decent extent. So we actually see a bit of value in the likes of BHP, Rio and Fortescue on a longer term basis.
And David, also in that sector, also a focus on the gold miners, of course, because gold hitting another record high, certainly in the midst of that trade uncertainty we're seeing across the globe at the moment. Is that being reflected, though, in what the movement you're seeing in the share price of many of those producers?
Not to a great extent, no, because as well as the US gold price being at all-time highs, or close to all-time highs, the Australian dollar has been sold off. So in Australian dollar terms, it's actually very attractive. And many of those stocks are actually trading below their net tangible asset backing and the value that we see in those stocks. So we still think that there is further upside in many of those gold stocks.